Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Yatin Mota.
Well, it turned out to be a thrilling Thursday rather for the markets, given the fact that the Nifty and the Sensex have resumed their record run after a day-long break. So the Nifty managed to cross that 19,500 mark, albeit briefly, but it did end just shy of that 19,500 level. In fact, even the Sensex hit a fresh high in today's session. If you look at the broader markets, Nifty mid-cap index also hit a fresh high. And both the small and mid-cap indices gained anywhere between 0.5% to 1% piece. Among the sectoral movers, of course, Realty was a big mover. You had DLF hitting fresh 52-week highs, and a lot of other Realty names also doing pretty well in today's session. Autos, I think, made a strong comeback today, given the fact that Maruti is still in the red, but M&M, that stock rallied over 5%. Tata Motors also among the top gainers on the Nifty. Energy is another pack that is buzzing, with the likes of Reliance Industries emerging as a big contributor in today's up move. All the OMCs are also up. So BPCL was up somewhere around 2% or thereabouts. If you look at the other Nifty gainers, Apollo Hospitals, Power Grid, as I mentioned, Tata Motors, Reliance Industries, and on the losing side, you had Eicher Motors continues to languish as the pricing war in premium bike segment heats up. Maruti, of course, laggard today. Yesterday, of course, it was a big gainer, hitting that 10,000 rupee mark. But today, it has come under a fair bit of profit booking. HDFC Life, HCL Tech, Bajaj Finance are among the other losers. OMCs were surging on the back of upbeat brokerage reports. IFL believes that OMCs can report the highest ever earnings in FY24. On the back of that, all these counters were buzzing in trade. But from the mid-cap end of the markets, given the fact that the Nifty mid-cap index hit a fresh record, what are the movers you're spotting, Yatin?
So, if you look at the mid-cap end of the market, CEAT and tire stocks were doing well. In fact, the likes of CEAT, JK Tire, Balakrishna Industries, all of them are doing well. CEAT being the top gainer, almost up by 19%. We also had SJVN, which is Satluj Jal Vidyut Nigam Limited. That stock was up 8%. MCX, we saw a sudden spike on that counter, 7% up, and top gainer of the FNO segment. We also had Electra, Jamna Auto, Torrent Power, and the likes of CCL products, NCC, Hindustan Copper doing really well in trade. So, it was a very strong trading session, good moves coming in. In fact, if you look at stocks like CEAT, Electra, Aurobindo Pharma, KEC, Lodha, Kalyan Jewelers, the likes of Engineers India, Power India, Abbott India, Tata Motors, all of them hitting fresh 52-week highs. So, the market is really active, be it the large caps, be it the small caps. There is a massive bull run everywhere. In fact, today my managing editor Anuj was saying, that the market is like Sehwag. Be it a test match, be it a ODI, be it a grass, pitch, or be it a, hard pitch. He'll score century, he'll score double century. And that is what Nifty has done. Yeah, so, very strong gains coming in. In fact, every day Nifty is up 50, 100, 150
That's
points.
true. I mean, barring yesterday, I think the entire week we saw the Nifty hitting fresh highs every other day. So on that note, let's take a look at some of the stocks that are on our radar this afternoon. Even though there is a bull run going on, but FMCG stocks were, in a spot of bother today, given the fact that Britannia hit a fresh 52-week high, but, the likes of Marico and ITC, of course, were in the red. Let's talk about Marico. That's the stock on my radar. Given the fact that, the sales were hit on the back of a drop in edible oil prices, the stock did take a hit, and the first quarter revenues are likely to remain subdued because of that. But, the street is still upbeat on the counter, given the fact that the commentary on rural demand has not been all that downbeat, even though the company has admitted that the recovery in rural demand hasn't really been as per anticipation. But going forward, the company is really optimistic that rural demand will see a pickup, and gross margins as a result will see a pickup substantially, both on a quarter-on-quarter as well as a YY basis. In fact, operating margin expansion will drive a double-digit growth in bottom line. That's what the management is saying, and street has taken heart from that. The volume growth has been in low single digits, but it is expected to pick up as the fiscal year progresses. And if you look at some of the brokerage reports, Morgan Stanley has retained its overweight rating on the stock with a target price of 611 rupees a share. It says that the management is confident that it will return to growth trajectory, and expectations of margin improvement is something that has that the brokerage has taken note of. Aside of that, Macquarie also has a outperform rating, target price of 620 rupees or thereabouts. Commentary on double-digit digit bottom line growth is something that Macquarie has taken note of, and a better commentary on margins has driven a 4% upgrade to FY24, FY25 and FY26 EPS. So if you look at Marico, as a stock, I think it is, all the FMCG stocks are fairly expensive, right? But compared to the sector PE, I think Marico is still better, because it has a PE ratio of somewhere around 54 or thereabouts, and the sector PE is somewhere around 60, in excess of 60. So that way the stock is pretty much, if you look at the entire FMCG basket, it's not all that expensive. And if you look at the return on equity, return ratios have been in excess of 30% for the last financial year. So, all in all, even though in today's session the stock hasn't done well, but looks like the coming quarters won't be as downbeat as the street was thinking, given the El Nino fears that are there in the market.
Clearly, and Marico is one stock which is under pressure for the trade, and obviously one bit was that the management does expect some bit of recovery in the second quarter of this financial year. So most of these FMCG companies, after the raw material prices come down, typically after a 1 quarter lag, you could see some improvement in the margins. Now let's talk about Bajaj Auto, and as Nandita was mentioning in the opening comments, that Eicher Motor shares are under pressure because we had Hero MotoCorp launching a bike with Harley Davidson, and we also had Bajaj Auto, which has launched the Triumph motorcycle. Now the premium category of motorcycle is where the margins are, where the money is, according to Bajaj Auto. Obviously the stock was under pressure, tried to recover in the last half an hour of trade, but brokerages do believe that in the short to near term, the premium motorcycle segment could be margin dilutive on an overall basis. The volume ramp up could take time, and more importantly, despite the good domestic market volumes, the export markets are still lagging for Bajaj Auto. In fact, if you look at Bajaj Auto, the key markets like Nigeria, Sri Lanka, wherein the key exports were happening, they are facing some trouble because of civil unrest and political turmoil. So, the export market recovery is something to watch out for. Citi as well as other brokerages are slightly bearish on the counter. They have targets somewhere in the region of 4,000 to 4,500. So let's see how really does the booking for the Triumph motorcycle shape up, because Royal Enfield is Royal Enfield. So you need to basically account as to how really does Bajaj Auto and the new entrants like Hero MotoCorp make a dent in the premium motorcycle segment, where Royal Enfield is a market leader.
Clearly, Royal Enfield is the undisputed, has been the undisputed leader in the premium bike segment. But of course, we'll have to see how Hero and Bajaj, whether or not they manage to dethrone Eicher Motors in that department. Well, with that, I think we've come to the end of this edition of Closing Bell. From Yatin and me, thanks a lot for watching. But if you have any comments, of course, leave them in the comment section below. We'll take note of them. And of course, we'll be back with the markets at 8:30 a.m. tomorrow. So don't forget to tune in. But for now, it's a goodbye for us, from us.